Greetings, Algo artisans. Welcome back to the Indicator series. Today we're going to talk about the ICHIMOKU indicator. Very powerful, it looks complex, but it's really not. So let's jump into the charts right now. Remember, nothing we say is investment advice. Please pause and read this disclaimer. Okay, so all of this craziness that you see on the screen is the ICHIMOKU, and this is an indicator that one of my friends says predicts the future. Of course, that's what we all want in an indicator. This is actually called Ichimoku Kinko-hyo, and obviously Japanese created, just like the candlesticks that we use quite regularly while trading. And the way this works is you have a few different lines. They're all mathematically calculated as things are, every single indicator. So you have the red and the blue. Red is called Kijun-sen, or the baseline. The blue is called Tenkan-sen, or the conversion line. And then you have leading span A, leading span B, and the lagging span. And they have some different Japanese names as well. Now you also have where you have the leading spans cross, and right between them is the actual cloud. So let's talk a little bit about how these are all usable. But probably the easiest ones to use are going to be the conversion line and the baseline. And what they mean, very simply, is that when the blue, the conversion line, is above the red, which is the baseline, that means price is probably going to become bullish in the future. And vice versa, when the blue goes below the red, then price is going to become bearish. Now, the other lines on here, the leading span A and B, those are creating the Kumo cloud. And the Kumo cloud is useful because when price is below the Kumo cloud, everything is bearish. And when price goes above the Kumo cloud, everything is bullish. And you'll notice that sometimes price will approach the cloud or even touch the cloud, and it'll bounce right off the cloud. The cloud can act as support or resistance. And the thicker the cloud, the stronger the support is going to be. So you'll notice that price often breaks through at areas where the cloud gets very thin. Where the leading span A and B actually come right close to each other, you'll notice price breaks right through the cloud. So that's kind of a good way of looking at whether or not price is going to change from bullish to bearish. As a matter of fact, one way this could be done is as you see the cloud get very thin, you take a look at how the baseline and conversion line are acting. And if you see a flip, you might have an idea which way things are going to go. So as you see cloud get really thin right here, at the time, the conversion line is below the baseline and it flips. And right as it's flipping, you see it bust through the cloud and go to bullish. And then the cloud thickens up. Now the cloud is red, indicating that it's mildly bullish, only because the price is above the cloud, but price does attempt to break through the cloud and gets rejected to the upside. And you see a very bullish event right there. And then you see here, the cloud get very thin. And as it gets thin, you see the conversion lines getting closer to the baseline. And right as they cross, price breaks through to the downside. Now, sometimes these are just going to happen in a way that you cannot take advantage of, but here's a great example right here where you really can take advantage. You see the cloud get very thin right about here, price breaks through, and pretty soon after that, you'll notice that the baseline and conversion line meet up and things go really, really bearish for quite some time. And then you'll notice price heads back up towards the cloud. However, it gets rejected. And again, you see the conversion line is below the baseline and price continues down. So those are some very basic ways to use this. Again, we have another great example here where the cloud gets a little bit thin, and right before it does, you see this conversion line break above the baseline and price busts through the cloud, although it does take a couple of attempts. And when price goes into the cloud, that means that things are uncertain, bearish or bullish. However, it's leaning towards bullish because you see how the conversion line is above the baseline. And this is going to move around a lot during the candle. So wherever price is right now, understand that it can change. So you want to look at prior candles as to where the baseline and conversion line are. Another useful thing about the Ichimoku cloud is that the baseline, the Kijun-sen, the red, acts like a magnet to price. Price is always drawn towards it. You'll notice that here is a really good example of how price headed down and then it headed up to grab the baseline right there. And then it headed down and continued and eventually met up with baseline again. So whenever you get an extremely strong move, kind of like right here, the market's closed, but there's a really good chance that when this opens up on Sunday, this is a Forex scenario, that price might just run down to here. And other indicators can be used, or price action can be used to determine whether or not this is going to happen. As a matter of fact, it's quite likely in this case because using some candle theory, we see bullish candle, hangman, price headed down, lower low, lower close, different class I know, but you see the top of this move, you see a bearish formation and price is headed this way and it's a strong move up, so price probably will want to go back down and be magnetized to this red line. So Ichimoku deserves a lot of attention. It can be used to create algorithms, certainly, especially when you kind of treat these baseline and conversion line like MAs. I think even mathematically, they are basically moving averages. They're just not smoothed. See, they're a little jerky, if you will, but the blue is like a faster moving average and the red is like a slower one. It's just based on the same math as the Ichimoku. You can notice how it's kind of jagged like that. I traded with Ichimoku for years, and I did it successfully, so I do think it's a pretty good indicator, even if you just want to use the cloud as a support. And the longer price stays above the cloud, you'll notice right here, the cloud flips green because the leading spans flip. So the color of the cloud does indicate whether things are bullish or bearish on a higher time frame. And because price took such a hard move up, this flipped right over to bullish. The cloud is rather thin right here, and again, the cloud is out in the future, as you can see, so there's a decent chance price could come back down through if price heads down really quickly. This would be a very sharp drop, but again, if it dropped towards that baseline, that Kijun-sen, that would put it pretty close right here. We'll just have to see how that goes when the market opens. All right, well, that's it for this video. We'll see you on the next one. I hope this video was helpful. Please come over to algofactory.tech. We teach people how to build their own trading method, otherwise known as an algorithm. You don't have to know how to code, but if you do code, we can put you on the path to where you can build something that trades for you while you're not at the computer. If you just want to trade manually, which is what most people are doing, then that is, of course, something that we can help you do and help you have the capability to possibly extract money out of these markets on a regular basis. And while we do focus on crypto for a lot of these videos, I'm actually primarily a Forex trader, and you got to know that crypto doesn't go forever. It goes for about a year, year and a half, and then for a couple of years, there's not much going on in crypto. And if you want to be a trader, you're going to want to understand how to really trade, how to put on those big boy pants, because what's going to happen is eventually crypto's going to flatten out, and the meme coins aren't going to be what they used to be, most likely. I've seen it enough times. I've been in this game since 2017. I don't expect that to change. So come on over, learn how to trade. As a matter of fact, we got some pretty happy customers who are already down the path of success in their algo building. Let's hear from one of those right now.
Hey, Cowboy V, I just wanted to give a heartfelt thanks for putting this project together. I initially joined Algo Factory a year ago, concerned about a repeat of the 2008 great financial crisis and the prospect of losing my job again. Within 12 months, under V and Cowboy's expert tuition, including live reviews, I've created a profitable algorithm launched across a selection of assets. Now, facing the prospect of redundancy and a nice fat severance package to trade with, my current worst case scenario is to keep my job. Thanks again, guys. Really appreciate what you've done here.
Algofactory.tech. Trade your job, upgrade your life, and we'll see you on the next one.